Hey, what's happening, guys? Good to be back with you here on a beautiful Monday night. Can you believe this weather? This weather is incredible. But we're not here to talk about the weather. We're here to talk about stocks and tariffs. And we got a lot going on. And so I thought it might be good to kind of chat about tariffs and what they mean, and at least give you some thoughts on how I look at those tariffs. And you can take that and what, about $5 and get a coffee at Starbucks maybe. And some of you guys own Starbucks, and I don't mean that as a slam on them, but their coffee is pretty expensive. So anyway, let's see who all is on tonight before we actually get started kind of rolling through this huge news on tariffs. It's kind of neat because it's kind of a new era for us. So I think it's going to be fun to kind of look around. So we got Shannon here, and he's in Wichita Falls, Texas. Shannon is on a long journey from home. So I'm glad you were able to join us, Shannon, and hope everything's going well. Sounds like you had a safe trip. So glad you're on the program tonight. We got Brad. Brad Durfee is in the program. Good to see you, my friend. Pat here is in sunny Florida, but he is heading back to the snow and ice in a week. So what would that be? I guess February 10th or so. Yeah, good luck with that, Pat. You can always move to Alabama, Pat, because we get about 1 to 2 snows a year, and those snows typically melt and become ice. And, at the most, we're like stranded for maybe a week. But other than that, it's great, man. You do have to deal with snakes and stuff here, though. That's a little different. So let's see. El Dynamico is in the house. And it's good to see you on the program, Antonio. And yeah, Pat, Canada and Mexico have already made deals, at least deals that would postpone the tariffs as they are threatened is not the right word, but as they are laid out. So anyway, it's good to see you guys tonight. We're going to talk about tariffs. I thought it'd be fun to talk about a stock that somebody, actually Jim Betts, asked about in the Discord. If you're not a member of the Discord, it's in the notes to this video. It's free to join. Just sign up, get in there with us, and we just enjoy talking stocks, and we kind of let folks know how our portfolios do every day, and it kind of gives you a sense for how other investors are doing. And sometimes there's comfort in that, because you're going, man, I didn't do so well today. And then there's other people that didn't do so well either. So it's a bit of comfort there. And then sometimes, your portfolio does really well and everybody else doesn't. So that's always good to see. So, and I see my buddy Jim Betts is here. Jim, we're going to talk about your stock that you asked about on the in the Discord. So we're going to hit on that Steelcase, SCS. Interesting. I worked for a competitor of Steelcase for several years, so it was kind of funny that came up. But so anyway, I'll give you my thoughts on that anyway, and then I will kind of go through what my current buys are this week. So I think I'll start doing that each week. So I think Russ talks about the news. I was not able to be on Russ's stream last night. I missed that. We had the granddaughters over, so it's a little hard to concentrate when they're running around. But anyway, I think he hits the news from Simply Safe Dividends. So I think what I'll do is hit my weekly buys. They don't typically change a lot, but there is movement week to week. What I do is I take the data from some of the apps that I have, and I download that, and have it go through the sausage machine, and then it comes out the other end. And then I look at that and I determine what are my top buys for that week. And again, that's just for my portfolio. It's based on what my goals are and what I'm looking at. But if it's helpful for you, I don't mind sharing that. But again, I don't share it because I'm suggesting that you buy anything. I share it just to say, hey, here's what's on my list, and you do your own due diligence. It may or may not work for you, but at least it throws a stock name out there for you to play around with. So is that fair? I think it's fair. So, hey, Michael Swami's in the house. Good to see you, buddy. So with that, let's go ahead and get into this tariff discussion. I'll go ahead and get this on the screen. There we go. We'll get Michael off here. There we go. And we will shrink this stuff down. And there. So I think that's about as big as I can get it. So, hey, let's get started. Tariffs. And this is going to be a simplified explanation. I mean, there's a lot of detail in tariff economics. I mean, we could talk about, societal loss. We could talk about, consumer and producer surpluses. But at the end of the day, I think these are the things that really matter for us as investors. At least it's what matters to me. So I thought I would share that with you. Hopefully it'll be simplified. If you're not an economist, this might be the right place for you to understand tariffs if you don't already. What are tariffs? They are taxes placed by the government on imports. So they basically will slap a tax on the cost of goods that are coming into the country. Why do governments impose tariffs? So I think this is a good discussion to have, because there's a lot of news out there about how evil and how bad this is, but there are legitimate reasons to impose tariffs from a government, and one is to negotiate for economic and non-economic concessions, and I think that's what you're seeing here. I don't know that there's a lot of economic concessions, and there may be, I just haven't looked deep enough, but the main thing is the whole border security, and so there's a lot of negotiation going on, and those are the things that actually have allowed the tariffs to be delayed for 30 days. Is that there was some movement, I guess, in terms of what the countries were willing to do to protect the borders. So that's item number one. Item number two is to repatriate manufacturing. And that's probably just it's a big word, but it basically means bring manufacturing back on the country's soil. And what that would do is reduce trade deficits. So as let's say China or Mexico or Canada or whoever's manufacturing these goods, they export those to the U.S., who imports them, and the U.S. pays for that. So it becomes an imbalance in trade, right? So if the U.S. doesn't sell that country anything, but the country is making goods and selling them to the U.S., there's a trade imbalance there. And so by imposing tariffs, it creates a cost that would allow the country, the U.S. in this case, to be more competitive, and companies might actually bring that manufacturing back onto U.S. soil. So it's a way to reduce trade deficits. It's a way to raise revenues, right? Because those tariffs are a tax, and that tax actually does end up in the treasury of the U.S. government. So those are kind of the three main things. Then, so why does the market fear them? And it brings along higher goods prices, right? Because if there's a tax on a good, then who ends up paying for that? And that is the consumer. So it's higher consumer goods prices. Those higher prices then lead to inflation, right? And then inflation leads to higher interest rates. Higher interest rates leads to higher cost of capital and lower ability to produce goods, and so therefore there's lower demand. With the higher prices, there's lower demand, and then if there's lower demand and higher costs, then there's lower profits. Lower profits lead to lower market prices. So that's kind of where we are. That's why the market fears them, and so I get that. That's a rational response. And so there's this whole idea of globalism versus nationalism. So if you haven't noticed, Trump is a nationalist. He wants to put America first, right? That is his mantra. Make America great again, right? That is his mantra. He is a nationalist. There are, and the country has been led for many years by globalists. Those globalists are ones who want to kind of make everything global, break down barriers, break down walls between countries. And why globalists fear tariffs is that it lowers global efficiency. So it creates some inefficiency there that's kind of covered up by these tariffs. It lowers global influence. So if countries are producing and working together economically, it helps with influence, also known as leverage. So there's some global leverage that would go away with tariffs, and it creates global trade wars because then it's like, oh, they're tariffing me, so I'll tariff them. And then so short term versus long term, I think there's a good thing to think about here as an investor. One is that short term tariffs can be very effective. And there is I heard this today. I didn't really think about it. There is a partial offset of inflation impact because of the strengthened currency. So yeah, prices are going to go up, but with the strengthened dollar, you're going to be able to buy more goods with that same dollar. So I think in the short term, I don't know that there's really a ton that I'm concerned about from a tariff perspective. However, that doesn't hold true long term. Long-term tariffs can disrupt supply chains. For instance, if you've got manufacturing facility overseas and you've got the skills and the equipment and things like that are making some high-tech thing, you then have to bring that, if you want to reduce your costs, you have to bring that to the U.S. You have to retool, reskill, and so it just creates a disruption, in the supply chain. So I don't know, what we're looking at here. I don't know if they're long-term or short-term, but at the moment, they appear to be short-term, and they appear to be used for, leverage. So hopefully that was helpful. If not, if I missed something, let me know that too. And but now let's go back to see what you guys are up to. I'm going to hit this button right there. All right. So let's see. Michael says it's a balmy 74 north of Houston, Texas. Boo, yes. Yeah, that sounds like here. I don't know what the temperature is here. I didn't even bring my phone with me. That's a shame. But because typically I will look up stuff on my phone. So unless I leave and go get it, you're kind of stuck with me without a phone. So I don't know what the temperature is, my friend, but it is warm. I don't even wear a jacket. I was out in short sleeves, so it was good. El Dynamico says the president of Mexico agreed to send 10,000 National Guard troops to the border. That's true, and I heard that Canada gave some rationale for delaying theirs as well. I have not heard the specifics on that and what they offered, but so at least both Canada and Mexico have been delayed for 30 days. I don't know about China. I think China was a 10%er, not what was the other, 25% maybe. So, we'll see. That'll be tomorrow's problem, right? So, so BND, I will write that down. Wow, I don't even have a pen here. What am I doing, guys? This stinks. I'll make a spreadsheet here, and I will write that down. Okay, BND. We'll take a look at that here in a second. I'll also look at SCS, which is Steelcase. Okay. Suzuki Man says he does not like brand new debt. There you go. I must have missed what that was all about. Maybe I went too fast. He said he doesn't like old debt either, so that's good. Hey, Billy, what's happening, man? You are in Vietnam again this week, so that's good. I hope you're enjoying yourself there. Um, yeah, so Michael says many think the Smoot-Hawley tariffs are a major contributor to the Great Depression. That's very possible. Yeah, I don't know. I think there was a lot going on there, similar to today. So we'll just have to see. Um, I did hear, it might be worth looking up, Michael, what was his name? Milton Friedman, the economist from back like 80s, 90s. He gave a discussion about the Great Depression and what caused that. And he seemed to think tariffs were not the major contributor, that it was the performance of the central banks. So that, they do play a big role here, and his support for that, if I'm remembering it right, his support for that was nobody likes to say they did a bad job. So the one who gets to say what caused the depression is the one who did the bad job, and therefore they blamed it on the tariffs rather than their performance. So that was his take on it. 69 degrees in Fort Worth. Fast Eddie, good to see you, man. So you're not too far away from Michael. In terms of Texas, I think it takes like 6 days to get through Texas. It's a big state. Yes, I am slacking, El Dynamico, but that's just the way I roll. I'm a slacker to begin with. I'm an all-day slacker. All right, Slammer 6789. Good to see you. It's 35 degrees here. Where are you at, Slammer? Because I think it's probably more like 70 here, but I could look it up maybe, but again, I don't have my phone, so I would have to do it on on the screen here. But anyway, it is what it is. All right, so Billy wants to know any new buys, and Billy, other than I did buy a stock last week. Nothing today. It's called Amphenol Corporation. Now, I think when we had the call last week, I had made a purchase of about 250 shares or so. It's about 1% of the portfolio. I ended up buying another 200 shares or so, and that ended up putting me at about a 2% of the portfolio. And if it trails off from here, I might buy some more. I'm not afraid to take Amphenol to like a 5%. To me, they are the Parker Hannifin of electronics. So Parker Hannifin has just knocked it out of the park. And I think from what I've seen of Amphenol, they have a great management team. They make great management decisions. And they're, in a place where they can take advantage of some of this AI stuff. So I think it's a good long-term hold for me. So anyway, it's on my buy list still, so that's good. So that's my new buy. I haven't bought anything else, I don't think. Let me just look. Yeah, I bought Amphenol, and that's about it. My only other purchase was ConocoPhillips, and that was just a couple of shares in a small account that I have. But I haven't bought. I don't buy and sell a lot, so the only real buys that I have are the Amphenol this year. So in the first, it's February 3rd. So what is that? About 34 days. So I've only bought one stock in that time frame. All right, let's see. Upstate New York. Yeah, I guess it would be a little chilly up there. So that's stay warm, man. 22 degrees in Nebraska. Seriously? That's a little more sweater weather. I'd be wearing a jacket, man. I'd be wearing a coat. Oh, Brad, I'm sorry, really sorry to hear this, man. 2 degrees in central Minnesota. Dude, you need to come to Alabama. That's all I can say. Yeah, we I don't know that it's gotten down to 2 degrees since we've lived here. We lived here 2 years now. So it has not gotten down to 2 degrees. It has been in the single digits, but I don't think it's gotten down to 2 degrees. So, but I did spend my first big boy job out of college was with a company called Cargill. And Cargill, at the time, I don't know if they are now, they were the largest privately held corporation in the world. So they had, a lot of agricultural stuff, right? So I ended up spending 3 months in Minneapolis learning some business processes they have because we were moving an office from Arkansas into Memphis, Tennessee. So I had to spend 3 months up there learning all the processes to bring them down and start the new office. So, and I was just a young whippersnapper then. I was probably, a year out of school. So, that was a great experience. So anyway, sorry about that, Brad. Just, bundle up, man. Build your fire. I don't know what else to say. Yeah, 35 degrees is balmy for February in upstate New York. That is right. Let's see. Oh, your sister Pat lives in Arab, and it's not Arab, it's Arab, Alabama. I don't know why they pronounce it that way, but they do. It's Arab, Alabama. Maybe I should move there also. You should, man. You should come down, especially maybe spend your time in Florida and then spend another month or so here in Alabama. That would be awesome. And I think it'd be a lot better than Minnesota. Yeah. Yeah, Cargill is still huge. I would assume that they are. That was, let's see, I worked for them in 19, should I even say these years? 1988. No, 87. 87 to 90. So for 3 years, I worked for them. So anyway, that was my first big boy job out of college. So Billy started buying Google a couple of weeks ago. That's a good buy. I started picking up Google Alphabet. Let's see, what do I have here? Alphabet is now. Let me go to a different thing. I can find it faster. Yeah, it's now 5.1% of the portfolio. So it's getting up there. I'm up about 25% on it. My average cost is 160. It's trading around 201 at the moment. So I was fortunate to be able to pick up some Google back when it was not in big favor. That wasn't long ago. It was 6-7 months ago, something like that. So, but yeah, I think it's still a good buy. I think I'm holding mine for long term. It's and I've got it as a my normal weighting in the portfolio is about 2.5 to 3%. So with it being 5%, it means that I believe in it long term. So yeah, there you go, man. 100 shares. That's a nice size buy, man. I don't even know how many shares I have. Let me see. Yeah, 400. So yeah, so that's nice, man. Huh. That's interesting. I didn't realize Alabama had a Toyota plant. I know there's one in Spring Hill, Tennessee, which is about an hour and a half, maybe north of here. But yeah, there may be one, somewhere else. I just don't know. I've only lived here a couple of years, so. All right, what are we going to look at? We're going to look at SCS. Enough of this chatting. Let's talk about SCS. I'm going to go ahead and share. Share. What am I going to share? There we go. I'm going to share this. There we go. Okay, let's go into Simply Safe Dividends. It's one of my favorite apps. It's probably the first one I go to just because of the data it has and the way it's laid out. So let's look at my buddy Jim wants to know about SCS, which is Steelcase. If you don't know who Steelcase is, Steelcase is an office furniture manufacturer. They also are into some, office consulting and those kinds of things. But the main thing is they make furniture, the panels, walls, doors, all that goes into furnishing an office and building office space. Because a lot of times, there'll be just an open floor. The only thing that'll be in there are bathrooms. So they kind of have to build offices and things like that. And they do it with these panel walls that they have. So Steelcase does that. As you can tell here, their dividend safety score is an unsafe 30. It appears speculative. Caution is warranted. Looks risky. No dividend growth in the last year. Another thing to point out here, Jim, is their credit rating is a double B plus. And yeah, this is cool. This has been added to Simply Safe. I've not looked at this yet, but so double B plus, they call it weak in Simply Safe dividends, but they call it junk grade here. It's not really junk grade. It's non-investment grade. So anyway, but I guess you can call it junk because it is. So they have a very low credit rating. They have, let's look at some other things that they have before I go kind of too much further. They were incorporated in 1912, though. They've been around for a long time. Let's look at, now their payout ratio is not terrible. It's a 37%, so that looks pretty good. I can certainly understand the attraction to it. Take a look at this dividend chart, though. Man, that is like a ski slope. That is not the bunny slope. That is the black diamond slope. That doesn't excite me a lot, especially, I know, Jim, you're into dividends and, you're kind of like me. So this doesn't excite me a lot because I can't really depend on the dividend being there. Let's see. You can see here the last dividend change was actually a cut in October of 22, and it has remained flat since then. Let's see what else we got here. The earnings payout ratio is not bad. What else is good? Let's take a look at shares outstanding have remained pretty flat over the last 6 or 8 years. And return on invested capital is not that strong. It's about 9%. So it's not terrible, but it's not strong either. I would say it's roughly the cost of capital. And theoretically, the theory behind return on invested capital is that as long as it exceeds the cost of capital, then your return of capital is greater than your cost of capital. So theoretically, that's why I look at that. And, net debt to capital doesn't look to be terrible either. But the interest coverage is awful. It's 5.4. I'd like for that to be around 8. So those are some things. And I see, I see, Jim, you made a comment here. I'll show that before we go further. SCS was supposed to benefit from Trump's back to work mandates at the federal level. Yeah, I think that may be true, Jim, but I don't think it's going to be a long-term windfall. I think it might give them a little bit of a boost, but I wouldn't count on that being an annual long-term growth. So I'm not a huge fan of Steelcase. What else can I do? But I will share this. Just because I'm not doesn't mean that others are not. So let's take a look at what the analysts are saying. Analysts are saying that there's a 44.5% upside to this stock. They have an average price of $16. It is currently trading around $11. So it's certainly, if you wanted to do a swing trade kind of thing, I think that would make sense. I wouldn't count on the dividend being there, but But if the dividend goes away, I think it could be in trouble. So it's got some risk to it. That's all I can say. It's just got some risk to it. And if you wanted to do it as a swing trade, I would certainly, because a lot of times we just want to have some fun, right? And so doing it as a swing trade, having a little fun, taking a little risk, sometimes kind of get your blood moving. And so, I can certainly understand that. But I don't, for me, it wouldn't be anything I would want in my portfolio for a long-term investment. So hopefully that helps. Let's see. What does it say? I mentioned it in Discord. Put a limit order on Axion. Axion. It tanked at open, hit the limit price, and then shot back up close to close up 0.91%. That's fantastic, man. Yeah. Some days you're the bug. Some days you're the windshield. Today, my friend, you were the windshield. So that's good stuff. Fast Eddie, do you think they're getting hurt by used office furniture being resolved, or maybe reused, or I don't know. I think that just because Trump said the federal government's going back to work, I don't know that means every company will be doing that. I think some companies have found that they can save a lot of money by not having office space, rent, that kind of things. And so I think that I think some will go back, but I don't know that from a public sector that you'll see the major shift that you're going to see in the government because of a new president. So, okay, resold. Yeah, I don't know. I don't think so. It would be more of a scrap value. I think it would, because a lot of this stuff is custom, right? Because the floor space is a certain size. There are certain things that are common. The width of the panels are common, but a lot of companies want their own branded colors, and so they would have to take them and take the fabric off, put new fabric on, and I'm showing that I know way too much about that. So anyway. All right. So yeah, for me it is too, Jim. I think it's just a pass. It's fun to look at, but I think it's a pass for me. The other one was let's see, where did I put that? BND. So let's take a look at. BND. Let's start here in tip ranks. So tip ranks is one that I use a lot as well. My three main apps are Simply Safe Dividends, Tip Ranks, and Morningstar. I also use what's the name of that one? I also use Fast Graphs every once in a while. I used to use this a lot, but I don't use it nearly as much anymore. All right, so let's take a look at BND. BND is currently trading at 72. Oh, it's a total bond market ETF. Yeah, so I don't know, man. I tend to stay away from bonds. Even though I'm in retirement age, I tend to stay away from bonds. And there's reason to have bonds in your portfolio. They do reduce volatility, but I found that reduction only lasts as long as you hold the bonds. So, yeah, that's it doesn't look like I'm going to get a lot on BND here. It's not going to be. We'll look in here. But it's not a company, so it's not going to give me too much. Yeah. It's got a nice yield, 3.69%. So if you're looking to, limit volatility, then this might be a good one for you. It grows its dividend by a pretty good pace. Let's see what the 5-year. Well, it's only 3% on a 5-year basis. 16% last year, though. So that's good. All right, what else do we got, guys? Okay, state of Georgia is staying hybrid for return to work. I think that is probably what we're going to see in a lot of places. I think the federal government will be a little bit of an anomaly there. So, what do I think of GD? That's General Dynamics. I own some General Dynamics. Billy, let me see how much of that I own. I'll take you guys with me. So here's my spreadsheet. You can see here, General Dynamics. I own about 105 shares of that, up about 30% on it. Here's my thoughts, Billy, on all of the defense stocks. So Lockheed Martin, General Dynamics, Huntington Ingalls, RTX, and there's one that I'm not thinking of. But on all of those, I like them from a long-term perspective. I mean, let's take a look here. Let me show you this. This is kind of cool. This will be fun, I think. Let's take a look at here. I'll put this back here. Let's take a look at. Let's go to General Dynamics here. I want to show you something specific. So first of all, it's a very safe rating, 97. But take a look at this dividend growth. I mean, let me take your comment off the screen here so you guys can see it better. So you can see it starts back here in 2005, and it is just a very consistent rise. It's got a 5-year CAGR of 7%. The latest was 7.6, a 20-year CAGR of 11%. So it is just a solid growth, dividend growth stock on an annual basis. I like those are the kinds of stocks I like for my portfolio. So General Dynamics is one. Let's take a look at Lockheed Martin. So they're an 84, but let's look at their dividend. Look at that. Very similar picture. So I own both Lockheed Martin and General Dynamics. I would take you to RTX. I own them, but RTX went through like a merger of unequals or something. And so the information that's showing for RTX was the old parent company, and it's just really not comparable. So if I go there and show you that, it looks like their dividend came down, but it really didn't because it wasn't RTX's dividend. So I don't want to go into the details of that, but that's why I don't show that. Let's look at Huntington Ingalls. I don't own them. Let's see what their dividend growth is. I mean, that's growing nicely as well. So, you know, I think you're looking at, well, the latest was 3.8%, but over a 5-year period, it's 11%. I don't have them in my sheet. Maybe I should. But if I were to look at the my defense, well, this will get us pretty close anyway. If I were to look at diversification, industrials, so RTX is about 2.5%, Lockheed's 2.2%. General Dynamics is 1.7. So what does that get me? 4 and 2.5. So 6.5% of my portfolio is in the defense industry. So, you know, I think that's reasonable. And so therefore, long story short, maybe it's too late for that. But long story, even longer, I do like General Dynamics. I like their programs. I think they have these really good tank systems that they sell to the U.S. government, and so I like those stocks. They fit well in my portfolio, so they are good stocks to have around. So yeah, for Billy, I'm a huge fan of General Dynamics. Is it the right time to buy? That's a great question too. I'm glad you asked, because let me see where they are in my list here. They are ranked number 19. I do have them as a hold, but it's not a bad buy either. I just have to cut it off somewhere, right? So my model says they got about a 14% annual return potential this next year. Analysts are saying 19%. So, that's better than a sharp stick in the eye. So yeah, I like General Dynamics. Okay, B&D is a Rob Burger favorite. That's great to know. Yeah. Michael Swami says best thing going for tip ranks is Julie. I agree. I sometimes just watch those videos just to watch her. So don't tell anybody. Okay, B&D is a unanimous sell on Seeking Alpha. That's good to know. Yeah, great metrics. Shannon likes General Dynamics as well. I think that's right on. RTX spun off from Carrier and Otis. That's right. I think Otis is now its own company, and both pay dividends. And yeah, so Otis is its own company. Carrier then went to be maybe Carrier, and they took some of the company with it. Then you have RTX, and then what was the other one? Was it Raytheon maybe that came in? And so some of that folded in. And so you got these companies that are going in all directions. And so what ended up happening is they put all of the historical Raytheon maybe or Carrier information onto RTX. And so it makes the past just nonsensical. This doesn't make any sense. So sorry about that. NOC, yeah, that's right. Northrop Grumman is another one. And that's actually on my buy list. So why did I not think of that? That's the other one I couldn't think about. I don't have any Northrop Grumman, but I do like it. It is actually number 10 on my list. And what is it on my buy list? Let's see. 1, 2, 3, 4, 5. It's number 6 on my buy list. So it's I like Northrop Grumman as well. It's got 3 buy ratings on Seeking Alpha. One of the things I like about Northrop Grumman is they're doing a smart system for the U.S. Army, and they're having some trouble with that. They're having trouble with that work. So why do I like that? I like that because there's some uncertainty there. I do think they'll get it worked out, but it might be a little while. And that's why I think it's at a pretty decent price. Morningstar shows them about 19% undervalued at the moment. So I think Northrop Grumman is a good buy at this point. I don't have any of the other, I'm just looking. I don't have any of the other defense contractors as a buy. Only Northrop Grumman. I haven't bought any of it because I've been too busy buying Amphenol and things like that. So, and I am currently, this might be interesting, only 0.9% in cash. So 99.1% of my portfolio is actively invested. So I've got a little bit of cash, but not much. So there we go. Yes, sir. You are welcome. Okay. General Dynamics tops Lockheed in the cybersecurity space. That's good to know. I did not know that. Yeah. United Technologies. You are right. That's who it was. Yeah, so I'd have to go back and look at all the details because it is so complicated that I really can't. Once I go through and I go, oh yeah, this company did this company did that, but then I don't remember it 3 months later. It's like it's just so convoluted. So, all right, what else do you guys want to talk about? You want to look at anything else? We got about 15 minutes left in the broadcast. Oh, let me show you my buys. How does that sound? I'll show you my buys. Dun, dun, dun. Here we go. Let me grow this so you can see it. There we go. Hopefully that helps. So the buys this week are ConocoPhillips. It is at the top of my list. The reason I only own 1% of it is I'm not sure how the pricing for energy is going to go. I do think that we will use more energy, but I think we'll also be producing more energy. So if we're producing more and the price comes down, which is the idea, right? To get inflation down, we need to get the fuel cost down. If fuel cost comes down, that means profits come down. And so I do have a starter position in ConocoPhillips. looking to maybe grow that over time. I might miss the boat on this, but I think I'd rather be conservative and see what happens. So we'll just have to see. My other second buy is Hershey. Hershey is, I think, undervalued at this point. The analysts disagree with me. They think that there's only an 11% growth over the next year. I think it's probably going to be, and they may be right, because it really depends on when this cocoa shortage is going to be worked out. If it gets worked out in the next year, I think the stock shoots up. If it takes 5 years, I think it stays in the doldrums for a while. So it's really just a timing thing, I think. So, but anyway, I have it on the buy list. I have Amphenol, which I bought in the last couple of weeks here. Realty Income is on the buy list. I don't own any REITs at the moment. And, the main thing is that their return on invested capital's low, and also they have no moat. And so anyway, I haven't invested in any REITs at this point. Verizon is on the buy list. That's, I think it's really more of an income play than it would be a growth play. But I think they have a great, if you look at Verizon's dividend yield, it's 6.8%. So 6.8% is a pretty hefty dividend yield. So if you're looking for income from dividend stocks, Verizon's one to take a look at. They have a really nice dividend. Next on the list would be Northrop Grumman. We've talked about that. Elevance Health and United Health are next on the list, and those are both pretty high in my portfolio. 4.9 and 4.5%. Hess Midstream is another one, and that dude just keeps going up, man. What did it do today? Let me look. Went up 1.05% today. So, it's doing really well. I think there's going to be a 15% total annual return potential. Analysts are saying 13, so we're in pretty good agreement on that. Microsoft, I think it's going to do well. It's 16% on my model, and analysts are saying 25%. So that's pretty good. And then I've added Pepsi this week because I think they're in pretty good shape as well. So those are my buy lists. So what is that? 3, 6, 9, 11. I have 11 stocks on my buy list. I only had 25 stocks in the portfolio and 11 on the buy list. So, anyway, there you go. There's that. Hopefully that's helpful. Let's see. Full of Knowledge, a great channel. Thanks, Billy. I appreciate that. Sometimes I'm full of things that I at one time knew and can't remember. So we got that. Yeah, Cyber Shannon agrees with, and Michael agrees with Billy as well. Billy, you're getting some love out there, man. That's great. Yeah, Michael's been bottom feeding on the REITs. And I think they're fine. I think, having some REITs is not a bad idea. I just, at this point, I just don't have room for them in the portfolio. I've got some other stocks that I like a lot better. So, you just can't buy them all. And if I want to keep a portfolio between 15 and 30 stocks, then, you just got to make choices, and it's all good. Christopher, it's good to see you, man. You've been buying Microsoft since its earnings dip. I think that's a good move, personally. And because I think Microsoft is just going to continue to grow. Right now it's 5.7% of my portfolio. I'm going to, what am I going to do? I am going to look at my largest holdings. So other than VU, I owned, about 30% of the portfolio is in the VOO, which is a Vanguard 500 index ETF. But the largest individual stock I hold is Microsoft, 5.7%. Then it's Google at 5.1, Elements Health, United Health, and then Hess Midstream, and then Parker Hannifin. So, and the interesting thing is Parker Hannifin grew there by itself. I chased it for a while, but it's grown. It's my first double bagger here in this portfolio that I started in 2021. So anyway, but yeah, I agree, Christopher. I think Microsoft's going to do really well. Yeah, it's good for you to be here live, man. It's good to have you on the program. Shannon, good to have you, buddy. Good night, and have fun while you're in Texas, man. And hopefully we can make a meet up on your way back. I'll shoot you some more details on that. So, all right, man. Well, it is 50. We're 50 minutes in, and I don't have any other comments. And there's nothing else that I wanted to share. Is there anything you guys want to hear before we sign off? I mean, there's no rule that says we have to stay on for 60 minutes. But if you guys want to do it, then we can. But if you got nothing and I got nothing, there's no reason just to sit here and chat. You know what I mean? And I don't see anything else. So, guys, it's been a great Monday night live stream. I appreciate you guys, and I look forward to seeing some more this week of all this stuff that's going to be happening, and each move that Trump makes. I saw a meme the other day that said something like the media, and it's a meme, right? So it's not really true, but the media is asking Trump to take a day off so they can rest. So there's been so many things that has gone on in the last week and a half. And so anyway, I'm sure that's going to keep going. Oh, yeah, El Dynamico. I'm sorry. I saw this earlier and I did not write it down. So APP, I think that's called App11. And let's take a look at that real quick. I am familiar with that little stock. Let's go to here. I don't think they pay a dividend. App11 Corporation. How about that, huh? Triple B minus. So that's they're investment grade, but barely. Let's see, barely investment grade. Let's see if there's anything else in here. Let's look at their return on invested capital. Looks to be growing. That's pretty good. Net debt, man, their net debt to capital is really high, 76%, but they're relatively new as well. And their interest coverage is 5.27. Let's see if there's anything else. Let's see what TipRank says about App11. Oh, that's Apple. APP. App11. There we go. Yeah, they say there's only a 3.88% upside. So even the analysts are saying it's probably at its fair value for the next year. I mean, there's at least one analyst who's saying 480, but there's one that says 270. Or one or more, I don't know. They got 38 buys, 8 holds, and 1 sell. So, but again, the average is, what the analysts are saying is that the average is going to be about 380. So, yeah, I don't know, man. It doesn't excite me a lot. I would want more potential return there, personally. That's just me. But it's certainly a viable stock. So, yeah, I'm glad you brought that up, Antonio. I'd forgotten about that. So with that, I'm going to let you guys go. I hope you have a great week, and I will see you on the next one.